Okay, so just quick intro. Like Pavel Kravchenko, Distributed Lab co-founder. We've been doing a lot in education, in blockchain. We've been doing a lot in tokenization or digitization of different kinds of assets. So we are always interested to bring more knowledge to our audience and bring the best people and that have real hands-on experience doing something, not promoting some bullshit. So today Christian is with us, and I would like you to introduce yourself and tell, like, I know you for 3 or 4 years already, four probably, and yeah, we've met
Even longer,
three, four times.
2015 in Odessa,
15
right?
then, okay.
Ah, there you
Oh,
go.
15?
15 or 16, one of the both.
Probably 16. Probably 16. Yeah, it was in Odessa first, I guess. Okay. So, actually, now I am sitting in the hotel where the second beep was conveyed. It's
Nice.
an it's an Austrian castle, built by Austrians. Yeah, so it's funny. I recollect all these beep experiences. The second one, the Gordon who enjoyed like cigar rooms in castle, and yeah, it was fun. Okay, Christian, tell us about yourself, what you do, and then I obviously will ask you questions because I know something that you do, and there's something much more interesting that you may even know that you do.
So, first of all, quick housekeeping. Do you actually record it,
Yeah,
Pavel?
yeah, I'm
Okay,
recording.
great, because then it would be great to share it afterwards. So,
If
yeah,
you say anything inappropriate, we will cut it off, so don't worry.
okay, very well, duly noted. Thanks for the effort.
Yeah.
Very, very likely though. So yeah, thanks for having me, and I enjoy the series you're doing. I've been able to watch one or two, specifically one with Gordon that you've done, and yeah, the point is, since we've met, you've been one of the front runners with Distributed Lab in terms of DLT and blockchain solutions. And so, yeah, it's a pleasure and honor. Thanks for having me today. Bottom line, I'm the founder of Baltasaar. So jointly with my CTO, Sebastian, we've been working in the industry for quite some time now, actually doing large cap enterprise, full stack development, even 10 years back projects. And quickly after the explosion of ICOs, realized that the tokenization and the ability to raise funds with that, it will substantially change the financial market landscape in the long run. So we've been one of the earliest looking at actually regulating, and what regulation, I mean, there wasn't regulation in 2016, 17 pretty much, to actually find a way where you can use the underlying technology that you have in an ICO, but do it in a proper compliant manner that is pro investors, and where there is investor protection, and where there is proper projects being able to fund themselves, and yeah, capitalizing on the technology, cutting out the middleman pretty much. And that was the idea that fascinated me from day one in with blockchain, that you have a layer of trust in the internet where you basically enable different and various accounting systems to work smoothly with each other without requiring third parties, or requiring less third parties, intermediaries, than you usually did before. And so this is how we got started. And we basically developed the financing and funding as a service platform. And now we are one, if not the one platform that enables, or that provides you a one-stop solution, legal, tech, and distribution of financial securities.
Mm-hmm. Okay, before we started obviously, but like in 2016, obviously there was no framework, and now it's still like very like, vague situation where nobody knows what's going to happen. I know like BaFin has approved digital custody solution, like the banks can perform that. They have long discussion about AML and everything like that, but how would they define a security token? Can you tell us?
So let me
You can tell about, sorry, you can tell about any jurisdiction where you work. So just if it's not Germany, you can tell about some other stuff. Just I know that Germany was doing a lot of efforts to make this happen.
So this is the really nice thing about the European Union. I mean, we have some substantial market with around 450 million population. We have around 20 trillion in GDP. And there is the one thing that compares us to the US as a domestic market. We have the euro as a common currency. So this is one of the main drivers where the independent states, they actually harmonized and started harmonizing a lot of regulation. So there is, when it comes to institutional investments, a long history of the EU being very collaborative and integrated, not so much when it came to retail investors and small companies issuing financing solutions such as bonds or trying to go public with shares. So what the European Union has been doing with the ESMA, they established the European Security Market Authorities and basically harmonized the regulation across the EU. That means I in Germany can go to BaFin and have one financial instrument approved. And with that approval, all the other states within the EEA are bound to accept this approval. And I'm instantly able to market my financial instrument that was approved in Germany to 27 other states.
Yeah, I know that some people try to use this approach in a little bit twisted way. They've got to some, as Trump would say, shithole country, and then got the approval and then come and say, like, yeah, probably it's my question wouldn't be about that, but so what is the simplest definition of the security token then, or digital? You may call it as you want. I will be a little bit, knowing what you know, that you are selling digital securities to people in a much more simpler way that anybody can imagine in the past. What would you say about what digital security is? Because it's like somehow you significantly added what I know, simplified the path that is required to do something that was considered normal 5 years ago. So can you explain that? Is it due to the new concept of security or a new model or what?
So there is, in general, first of all, everywhere you have equity of debt markets and you have investments. So when I invest in a company and I'd like to gain profit from the company, or I'd like to have a fixed coupon if it's a bond, through tokenization, I, for the first time, am able to create a security out of an investment. So what is a security token? First of all, it's a representation of a legal interest that I have and hold against a company. So instead of having a paper that says you owe me 8% per month or per year in interest, I have a token that is now legally representing that title.
Yeah, this is the simpler, the simple part. So like instead of paper, you have a digital version of it. There shouldn't be any big problem, right? At this point.
Correct.
So obviously, I know that many regulators considered a blockchain as a completely new means of value transportation or so. And they passed specific laws saying that blockchain can be that new version of transmission protocol instead of paper. But if to apply principles, it's nothing different. It's just, okay, digital form, paper form, but the essence of it is still the same. So that should be more or less easy. But why people haven't sold digital version of securities so easy in the past?
So when you talk about this, and this is a twofold reason. So first of all, it's very good that if you have a security, you can actually gain market access to 27 countries. However, that comes with a lot of red tape in terms of regulation. Because once I want to issue a security that I can also market to small investors and not just do private placement memoranda,
Right.
market to institutional investors, I need to fulfill a lot of red tape. So be it from in terms of the custody, how the token or the paper, for that matter, are held in custody because you need a custodian for the
Right.
paper as well as for the token. You have the brokerage. So whenever somebody wants to distribute the paper or the token, they need to fulfill a lot of documentation and reporting duties. And therefore, they require a lot of different parties. So for example, you need an escrow agent, you need a notary, you need the lawyers setting up the terms and conditions for your instrument. All together, you need somebody that can sell it, that has the required license. And then you're tapping quickly into a variety of legal code that the regulator has to basically approve and say, okay, your escrow guy has the approval, the custodian has the license, your distribution has the license. There is a
Okay.
there's a trading facility that allows you to actually issue in the primary and secondary market the papers, and that makes it complex.
Yeah, and that's what we all know who at least once digged into the security token, idea that like in the US there are many companies who tried to do like this scheme, but then technically they all failed. It's kind of the sole market is almost zero. It's like can you comment on two things? Like why is that? And the second, what have you done so you are selling this? Like
So
where is the magic?
where's the magic? It's pretty much history. Why are we where we are? Because there's been a huge financial crisis in 2008. That was actually called MiFID II, which is a European Regulation Markets and Financial Instruments Directive, which is basically a legislative framework of the European Union to regulate financial markets in a way that the individual investor, specifically small cap investors, are protected because they lost a lot of assets during the crisis. The institutions, they were either they didn't suffer, or when they suffered they somehow got a bailout. What did that do? So first, yes, it made markets a little bit more secure for small investors, but also it kept their access, because now you
Yeah.
cannot easily market with potentially very good products and financial instruments to retail investors because of all the red tape. So what's the magic? So this is first of all status quo, what happened. And this is, for example, we have a very interesting construct here. I can comment a little bit more on that later, of having silent or non-voting shares in companies, specifically, for example, shipping companies. They were huge and thriving. People were buying shipping containers and investing in ships because they could gain a lot from the proceeds, and there was a very efficient way for them to tax. So like there was it's called tonnage tax, and so basically it didn't pay so much tax. That's why it was very effective and interesting for retail small cap investors.
So investors invested in shares.
They invested in now they invest in shares, and they did invest in shares in the past, correct? However, with a little bit of a side note, they were then cut off by the new regulation because they said, okay, people lost a little bit of money. You cannot participate as a retail investor anymore if you don't invest at least 200,000. Now through tokenizing and tapping into the security sui generis, that is what it's called, we basically bring the entire reporting, the fulfillment structure, and now we come to the magic point, the entire legal, tech, and distribution part onto the blockchain. Thereby make it transparent and accessible at all times for the investor, and make a formerly illiquid asset fungible. Because in order to be classified as a security, it needs to be first transferable, and it needs to be tradable. And
Right.
these shares weren't tradable or transferable in the first place. Now, through tokenization, that is enabled, and we allow, again, for example, a shipping company to sell their instruments to retail investors at a €100 ticket size instead of 200K. So what
But
is
why is that? Because if you said there is a regulation saying that 200,000, how come it's allowed to sell like 100?
So because what you need to do, and now we come to the red tape, in order to protect an investor, small time investor, you need to be able to demonstrate that the share can be transferred and can be traded at all times, so that the investor has lower downside risk in terms of not getting out.
I see. So, okay, there was a special type of of investment instrument which was not that liquid, and that's why there was a cap, 200,000, and now you are changing the nature of that instrument, basically. We're cutting it to pieces, making it more liquid, and now another regulation apply, and therefore you can buy. So you're transforming the securities. The both of these instruments are securities.
This is exactly, now you nailed it down to the point. Why does the EU, the European Union, drive blockchain technology and financing? Because formally, an investment was a loan. I gave you money, you gave me back coupons. It was a participation note. I give you money and you say, hey, if I'm doing well and I have earnings, I'm going to give you a piece of it. Or you were giving me non-tradable shares, meaning I don't have any voting rights in your company, but in terms of loss or gain, I participate in it. This, however, wasn't fungible. That was on a one-to-one relationship, and you couldn't do it one-to-many, one-to-n. Now, the European Union basically translated this predicament into legal code that is classified as security sui generis, which is basically Latin, and says it's a security of its own kind. And this was possible only because now the blockchain is basically our central register or decentral register that enables.
Central.
Yeah, there you go. That's a whole different webinar per se, I'm telling you.
And you know, I have a small comment. In 2015, I talked to the CTO of a very large bank, and I explained him the idea of a decentralized auction that we've been doing with Lasha. And he said what? He understood it, and he said, guys, so you are doing this centralization of data access protocol. So it's not like different data sources anymore. It's like a single source which you can access and get the data. So we call that decentralized blah blah blah, but it's in fact it is a centralized thing. So I mean, it's not bad. It's just that it is. Okay.
It just basically makes the whole thing more efficient, and you have the you have the possibility to actually decentralize it, and can then decentralize the functions that are relevant. It doesn't have to be a fully decentral system in order to benefit from the decentral part. So the first time now you can, and this is I'm not sure if this is what Lasha has been tapping into, but for the first time now, I don't need the escrow agent, I don't need the notary, I don't need the multi-trading facilities such as an exchange in order to enable my investment to be tradable, but by putting a token on a blockchain and making that accessible, I can guarantee in terms of regulation that the investor can trade and transfer the instrument freely at any time, 24/7, 365 days a year.
Okay.
Gain the privilege.
Does it mean that in your particular business case, you don't need the notary, the transfer agent, and all these other parties?
We don't need
what you do?
We don't need a bank. We don't need a notary. We don't need an escrow. We don't need a global certificate that you usually need when you issue a bond. We can all build, and we built all this simply on a modified Ethereum token.
Okay, and the question is, so this was allowed as the result, it was possible as a result of this new German regulation, or what?
In part, yes. However, also in part due to the genius of our CTO, since we were actually the first ones in Germany to push through a participation note with a BaFin in 2018, that where the regulation wasn't that crypto friendly already. So why am I telling this? The bottom line was you need to be able to prove that the investor can always sell and sell the share and gain the same privileges like they have in a regulated market such stock listing on an exchange. And the blockchain now acts as the exchange, as the escrow agent, as the bank.
Okay, wait. So when you approach the regulator, how you positioned yourself then?
So what was most important was, first of all, doing the standard procedure like you do when you want to issue a bond in a primary emission. So you have to define the terms and conditions, you need to define the subordination rights, participation rights, and all that you do when you issue a bond. So let's say you want to collect 30 million euros. You want to pay 8% in coupon, and then you are writing down all the terms and conditions, who can buy, what they get, what the underlying is, when payback, payouts, etc. are redeemed, and when they can cancel or terminate their contract. Mm-hmm. So that is what you need to do anyway. Now,
but as I said, you approach the regulator as an investment bank or as an issuer or the company, by who you?
As the issuer, basically in the first
as the issuer.
We've been consulting the issuer, and we've been giving him everything on his name, on his own accounts, because we didn't have a financial license. And then they benefited from the regulatory privileges, because if you issue a security, you may also trade it and create a market for that a third party doesn't.
Okay, so basically the company that you consulted was allowed to do all these actions, to issue the security, to put that on the some registry, blockchain in this case, and let the buyers make secondary market out of it. Correct. And they proved to the regulator that they satisfy all conditions. So the conditions were not saying, like, because in the US, that's how I understand what is the problem in there. They require it to be different companies. They have to have a transfer agent as a company with the license for transfer agent, and the broker and all these others. And obviously, if you want to build an ecosystem, I mean, if you need to digitize some process, you need to convince all these guys to switch to this process or get all these licenses yourself, which is like long path. In case of EU, so technically they didn't require the particular company to be responsible for part of the process, but rather they said the end user should get this type of service with this quality. And that type of service with that quality. Am I right?
Correct.
Wow. So that means that the law by initially was much better designed then.
It wasn't. So you have the regulation does what it says. As a company, if you collect money from an investor, you need to be able to, first of all, be transparent, show all the numbers as they are, demonstrate your business model, and if you market publicly, you need to fulfill a lot of how to put it, just formal conditions. For example, bringing by a lot of financial data, bringing by an escrow agent. You need to have a bank with a financial license to sell it. And with the new regulation, that was basically changed because now they said the issuer has a privilege if he does it himself. He may sell and trade these securities. Possible, it became only through the blockchain because you don't need to pay the bank now, don't need to pay the escrow agent now, and you don't need to pay the notary anymore.
But so this legislation was influenced by blockchain then?
Correct.
And it happened in 2018 or 16?
It started in 2018. This is also when the German government, they issued initially a position paper how they want to move forward with blockchain technology, and basically saying that you have a documentation procedure of what happens with a security, that the payouts are done correctly, that the people who buy it are actually entitled to buy it in the traditional markets. And that is typically an exchange. You need to go there, you need to open a depot, you need to upload your passport, you need to fill out all the data where you have your money from. And that was impossible for smaller companies. They couldn't bring their own loan to an exchange because the process is costly and usually involves so much red tape that the company doesn't benefit from it. Now, by fulfilling all these conditions on the blockchain and being able to prove it at all times to the regulator, to the investor, and finally, they can do it. And the German market was one of the first to actually capitalize on that, putting it into law. Then the EU started harmonizing and introduced a so-called passporting procedure that allows you, if you have one regulator that approves your financial instrument, all of the others have to approve it too.
Okay. So basically, as I know that in the US and EU, every company can manage their cap table using tools that they select. So basically, the cap table management tools become also issuing tools and trading tools.
Exactly. So the regulator said, if it is a security from the substance point of view, then this is higher than the form. So substance over form was the principle that the regulator embraced when creating the so-called security sui generis of its own kind, that it only became possible through blockchain acting as the registry and the transfer agent in one single database.
Okay, and then I have a bunch of questions. First of all, have they mentioned any specific blockchain in the regulation?
No, it's just the transferability and the tradability. They need to be fulfilled and they need to be proven. And this is basically what you need to do. You write the same terms and conditions with the bond as you did before. Only you have to explain in detail how the technological underlying guarantees the fulfillment of all the duties you have when issuing a block.
Okay, the small side question, like anybody can launch their blockchain and pretend that's like solution that anybody can use, but then we all know that can be manipulated.
Correct.
Is there any like restrictions on what you can do or what you cannot do?
Not that at this point that I'm aware of. What is relevant is that you have a solution, even if the blockchain you issue on is not supported anymore, that investors can still get their money or their token back. And that would be possible if you just have a private network set up.
Okay.
That can be maintained by the company, and thereby you fulfill regulation.
This is very interesting. Okay, but let's leave it for now. But what we all hear it, and even for me, it sounds like very exciting. And my question is, if such things are allowed, why? What are the not why, but what are the main reasons why everybody is not doing it right now?
Brilliant. Thanks so much. That was the one I was waiting for. No, simply put, it's still complex because what you can do now with blockchain is you can fulfill the tech part of the custodian, of the bank, of the notary. you can fulfill in one tech solution. However, you still have a lot of legal issues with setting up a regulatory compliant prospectus. So the information sheet for the investment, that is vastly complex. Then you can basically buy such a tech solution that guarantees all the fulfillment of rights and the transfer of ownership, etc. But still, then you need somebody that can actually sell the solution or sell the financial instrument. So now nobody actually has the capability to do legal, do the tech, and sell it in the name and on the account of other people. Basically, foreign account, like own account operation and proprietary account operation, meaning I can sell, if you, Distributed Lab is issuing a bond now, you can sell it, but only you. Or you need to go to a MTF or OTF. So, however, no third party can sell it. And that's the problem is then you need a bank, because the bank is the one that calls their clients and says, hey, I have Pavel's bond now, please buy it. If you don't have the bank, nobody's going to buy it. But now, with integrating the legal part, the tech part, and the distribution part, we are able, and this is the one magic we did, because that was your question before, that we have one-stop process that gives you the prospectus, because we've done it quite a few times, then gives you the tech with the click of a button. And actually, really, it's a click of a button. It's an invest now button, and everything else is done in the back end.
Invest now and something later button. Yeah.
Exactly. But actually, it's real. We could like deploy the token straight away after we've closed one round, and then hold their token in their cell phone and can transfer it to another party, and thereby have a secondary market. And the most critical part is, why has not everybody been doing it so far? Because they've been lacking the distribution or the placement capability. Because if you have a bank and the bank says, okay, I'm gonna sell 10 million of your financial instrument, then you have to pay substantial fees, but they do it. However, it's very restrictive, because most financial instruments are not bankable, so to speak.
Not bankable, I mean not sellable.
Exactly.
Not so interesting. Yeah, and I assume the bank charges quite a big premium.
Absolutely. And now they're able to actually employ us as their agent, because now we have the license to also sell the instrument across the European Union, and we can do it at a fraction of the cost, because the process is at a fraction of a cost, because we employ the without.
Okay, then I'm really relocating to Munich, you know.
Yeah, there you go. Munich is a nice place. You should come.
It is a nice place, yeah.
Berlin is definitely a nice place too, so you're always welcome in the office. Yeah, why they don't do it? Either they rely on the bank to sell it, and then it costs a lot of money. Plus, they have a lot of money they need to put up front for the prospectus, and yeah, then they don't need the tech, because if they invest 100,000 in the prospectus, then go to the bank and pay substantial percentages, they can do it. However, the bank is not accepting any company doing a loan or issuing a bond, but they're very selective. So it's not, the small companies don't have the same access to those financial inflow such as the larger companies. However, with the token or tokenizing the investment and thereby securitizing it, making it tradable, transferable, and then being able to sell it yourself, plus employing a lot of third parties that can sell it at a fraction of the cost, like the bank, you democratize the access to the financial markets for both the small company that can now issue an 8 million bond for 10% of what would cost with the bank, and on the same hand, give the small-time investor that is non-accredited and cannot invest 200K the access to that financial instrument that he wouldn't have before. Okay,
and then I have a few more questions. One for the later discussion. Which companies are you onboarding now? What is your best client? And the second question is, okay, let's answer this question. I forgot the second one. It is also interesting.
No worries, it's going to come back. So this is, we were presented with a small change. So around 2.5, 3 months ago, 2 months ago actually, we partnered up with CM Equity, which is a fully MiFID II regulated financial service firm that can basically do investment banking. They put us under their liability umbrella, which enables us to perform investment banking services. Before that, we basically just were a technology provider. We told the clients, listen, you don't need to pay all the different intermediaries, use our tech, and then you yourself can issue and sell the instrument across the European Union. However, you need to make sure that you bring in the sales yourself. And there we had a huge...
Yourself, because they couldn't employ the broker, or what? Because the bank was not participating.
Exactly. Okay. And they could also only do it because it was a lot cheaper. It was a fraction of the cost. And the bank wouldn't have even accepted their case most of the times. So we basically gave them a tech and said, we cannot sell anything for you because we don't have a license to sell third-party instruments. Do it yourself. And there we had a different market setup than we have right now. So now we are particularly strong with SMEs. We have oil companies, we have shop systems, we have biotech, we have across the board shipment companies and ship container companies that are specifically interesting, because that's the case that I mentioned just in the beginning. After the crash in 2008, regulation got so tight that the actual very good investment, which gives small investors 23, 24, 25% per annum, were basically cut off because they were deemed too risky.
Right.
Now, through embracing the new regulation, these companies can again issue the same type of instrument to the small and medium investor that has no accreditation, and they again are gaining access to the proceeds and to the returns as they have.
Look, just a straightforward question. So I can give you money.
Yes.
And you will be able to invest in it in some companies, and I can get a token in a wallet.
Yep. Exactly.
And then the question that I wanted to ask is regarding KYC and AML.
Absolutely.
I assume that only European Union residents are able to invest.
Not necessarily. You just have to. So first of all, the investment, you need to differentiate the investment from the distribution.
Okay.
If you send me an email, Christian, I heard about this company. Can you please send me a link to invest in that company that you have tokenized the shares of? I can give you the link and you can invest. It doesn't matter where you come from. But the problem is I cannot actively publish any information, for example, in the US saying, dear US investor, please invest in our product. And that same applies for companies outside the EU, unless you fulfill the required public distribution compliance in order to be deemed a tradable security. So if you fulfill the buyback and the holding times for US investors that is defined under Reg D and Reg S, you can also have US investors included. However, it's a very complex process.
Okay, but regarding the EU one, the first comment that you said, I cannot send the link to some US site and say invest in me. So, but can you do it within the EU, or
yeah, absolutely.
Can you publicly market?
Now I can publicly market, and I can actually show you a live case that's going live right now.
Okay, let's do that. Sure.
So just a quick intro to that. This is basically saying now I can do Facebook posts, I can do Google AdWords, I can just go on investor roadshows, and can, similar to an IPO, go public with my small-time investment bracket. So I have the same possibilities when I'm doing an IPO, just without the cost and
maybe some trust issues, obviously, because
absolutely, that's true. You always have to convince people that you have the right solution and they should invest into you.
Wait, and regarding the KYC part, you said that anyone can invest, but I assume there are some. It's the responsibility of the company to like vouch their investors.
So what we do is, depending on the investment bracket that you're shooting for. So let's say if you have a participation note and it's below 8 million euro, and you'd like to address both retail and institutional investors across the EU. That is one set of regulations that applies and one set of KYC and AML questions that you have to ask, document, report, and make accessible in terms of audit trail. If you go beyond 8 million, it's a different set. And we have incorporated all these sets. So basically it's like, how do you call it in English? Parametricized, I don't know. It's parameters. We set the parameters depending on what kind of product you issue on our platform. Then automatically the specific KYC and AML templates are included in the onboarding process of the investor. Everything is stored in a regulatory compliant manner, and then the investor can go through and invest. Maybe
Okay.
let me show you. Let me show you just one thing.
Yeah.
What it looks like. Maybe that helps spur the discussion. So you see my screen now, right?
Yep.
Okay, cool. So this is one thing that's going live. So here, this is these guys are producing very fancy magnets that are used by huge automotive suppliers for a variety of things. What you see here is basically you have an overview. You, as an investor, you come here, you see, okay, how they use their proceeds and their funds, what the roadmap is in the next couple of steps. And the most important piece that you have here is you have a little bit of overview, what the return is, how many investors, etc. And the most important piece is this here. The moment you click on invest now, we basically kick off a crowdfunding process. And you can just click here, 10K, you go to next step. And then we kick off the KYC and the AML procedure and push you through the process of personal data, verifying the ID, all the data where your money comes from. If you are qualified to invest in that product, you are basically agreeing that you read the terms and conditions. You need to download them. You select which currency you want to invest in, be it Euro, Bitcoin, Ethereum, whatever. And once you're done and you went through the process, then you are already owner of that token. And once the tranche is fulfilled, we basically deploy the token and allow companies to either host or like do the custody themselves. They are allowed to do that. Give it to the user, fully decentralized, and it becomes money, because if they lose their private key, it's gone. Or just use our custody provider that we are fully integrated with. And this is basically now we would start selecting all the information from the investor. That's it. Very simple.
Yeah, it should be simple. Yeah. Okay. Okay. Interesting. So what about AML then?
So we obviously do collect the information where the money comes from.
Mm-hmm.
We are not the one that has to verify it. The issuer has to verify it.
I mean, AML on the secondary market, because do you do some whitelisted tokens or how?
Absolutely. You need to build in a transfer restrictions, and that's what we did. So bottom line is, when we issue a security in the primary market and you have it now on your wallet and you want to transfer it to somebody else, this person has to be whitelisted and goes through the same KYC and AML process than the buyer from the primary emission.
So it's not a stable coin model where only the first buyers are KYC, and then the secondary market is like free.
And now what we do is we basically are just building. So we are using now also stablecoin, euro-based stablecoin, facilitate T0, so that we can have instant settlement in the secondary market as well, and thereby reduce the costs and the counterparty risks in secondary markets substantially. Plus, actually enabling market making. So really bring liquidity to formerly illiquid assets.
Mm-hmm. So it means the stable coin probably is not enough. You need like some exchange to accept this, your tokens.
No, you don't, because as the issuer per se, you are allowed to operate the exchange, and you can do it either as a
I mean, in this way, yeah.
So
In
you
this
can do
way.
that right now. It's just an OTC market.
Yeah.
So that's already built in our solution. What we're working now on is that we actually do a kind of like a discretionary or non-discretionary market that the issuer can operate, and thereby bring third-party market maker feeds in, and yeah, put liquidity to assets that weren't liquid before.
Okay. Have you thought about connecting to some exchanges then?
That is theoretically possible. You have the ISIN number, and you can assign, and that's a legal code, so-called ISIN number to a token. And thereby you can put it, in theory, that hasn't been done yet, you can put it in a depot from a bank.
Okay, but I mean the crypto exchanges, they technically they have to KYC all their users in order to use your solution then.
They would.
Only
Correct.
Yeah.
Correct. So if
Okay,
you're
so
at the exchange, you couldn't fulfill the transfer restrictions or the whitelisting, and then you couldn't buy the token. Correct.
at the moment of buying. Okay. So okay, the last set of questions would be regarding digital identity, because obviously the process of KYCing everyone, many to many, right? Many people, many companies, and they have to KYC each other, and this is a long process. And do you envision some service, or may you become the service that collects this data and then aggregates it, and you don't need to KYC yourself like many times then?
That is the ecosystem vision, and that is what I'm fully subscribing to, where we basically now build the first step towards something like that. However, you need to have a stable and robust ecosystem that you can basically just take out or like use and recycle the identities. Basically saying once you identified within that ecosystem once, you can just provide the info that you are an investor that is allowed to get the token without actually having to go through a KYC process again. If you have KYC'd with us once, then it's enough. You can basically buy every token once you have the yeah, of course, across every single company that we issue for.
But wait, I know that at least in the US, you have a company is responsible for the KYCing themselves, the person themselves. They cannot rely on the third party, and you in this case are the third party.
But in this case, you are, so once the investor is authenticated, and we provide that data to the other client, because they invested with one client with us, we provide it to the other client, that's fully compliant.
Oh, really? This is very interesting.
So this is the idea of actually building up the ecosystem so we can recycle, where you with digital identity, it's a step ahead. This is the smallest smallest form of it right now.
Okay, then the last question from my side is migration of data or between solutions. Like, let's say Ethereum won't be suitable, or the fees will be exorbitantly high, and you cannot like move anything. So, have you thought about migration?
We're basically completely atomic to that. We just built the layer, and which blockchain you connect is pretty much irrelevant as long as you fulfill the transfer restrictions that you need to build in a token in order to be classified as a security. Backwards compatibility with ERC20, etc., and then roll out into another one, all there.
I mean that you have to like somehow transfer the private keys so the users will be able to use the old wallet with the new infrastructure. That might be an issue. So my question was, have you thought about the abstraction layer that kind of eliminates the underlying, you know, architecture of all these systems. Or I mean, I understand what I know about what you do is you do as fast as possible because this is how you take the market. You don't like think about all these things in the world that may or may not happen. Maybe fees will not go high, and then you're okay. So you don't have a problem. So okay.
So this is a perfect question to address to Sebastian, and this is why we definitely need some time vis-a-vis with public channel, because yes, DID in its essence will eventually enable a true democratization of financial markets when people, once verified, can engage in various services applying to one central party where they've been verified with. And that vision to make a little bit more reality is my greatest pleasure.
Okay, then the last question. Can it be that there will be a few parties, well, unlimited amount of parties that do KYC, and their verifications will be valid with any client too?
I mean, that's
so many agencies, so clones of yourself, will be doing validations, and they'll be okay with
This is pretty much the whole platform revolution vision, where we say, okay, there is different systems interacting seamlessly with each other, and DID basically formulates that vision as far as I understand, that you can interchange the parties that have verified you, because now it's written on the blockchain. Your identity can be approved by others, and at some point, obviously, you need a layer where also a regulator is accepting that level of authentication. And that is what needs to be built.
Okay, interesting. So it's financial internet.
It's financial internet. It's exactly that vision. That's why I wrote the book, and I'm gonna proofread the new one.
Yeah, it's coming soon. Okay, Christian, it was really interesting, really interactive. I honestly, I may ask another questions, but this and your answers are already overwhelming me and probably our audience. So I thank you for this very dedicated hour.
Thank you very much for having me. I'm happy to join again. I hope to see you soon in Odessa and Kiev when the race has slowed down a little bit. And we're gonna really have to reiterate. I want to build DID with you.
Okay, cool.
Thank you so much.
Thanks, Christian.
For the format. Looking forward to the next webinars.
Yep, good.
Have a good evening.
Thanks everybody for joining.
Bye-bye.
Yeah, bye.